Hello everyone, this is Dr. Good Vibe from OmegaSupreme.com, and today's date is September the 29th, 2010. It is 5:45 p.m. Eastern Standard Time here in Toronto. That means that North American markets are closed, Europe is closed, and Asia has another hour or two before it starts to open. That includes you Aussies out there. So let's get started on today's news and happenings that occurred today. If we look at the calendar on Forex Factory, we saw building approvals and coming up in the Australian region and New Zealand business confidence. We don't trade New Zealand dollars, we don't trade the Kiwi, so don't care. The Aussie dollar, however, building approvals may impact lots of the positions that we have open on the Aussie dollar, but doubtful, because simply there is a great number of other macro events going on that warrant us looking at them versus these minuscule building approval, etc. The general, I feel the general momentum right now is the weakening of the dollar, of the US dollar, and the strength of Asian currencies and frankly other currencies. My personal hypothesis, and we'll get into this a little bit later, my personal hypothesis is that the US is going to be getting out of their debt situation. That means their incredible multi-trillion-dollar deficit and debt by essentially depreciating their currency. So by depreciating their currency, they're going to be able to pay back their debt with dollars that are not worth the same as they were before. And many countries have done this kind of strategy to get out of debt, basically looking for an inflationary type strategy to pay back debt. And essentially right now, if we're looking across the board, and this is in the news as well here on Bloomberg News, it's a race to the bottom. And a race to the bottom of the currency, very currency barrel. So let's take a look at some of the major news. Asian currencies out to outperform the dollar. Yep, that absolutely makes sense. We've seen that already. It's nothing new. It's not new news. Dollar drops the 8-month low on speculation of the Fed to increase debt buying. As long as the Fed and the U.S. government continues to fearmonger the market and saying that if the market does not get better or if the dollar appreciates too greatly, they will continue their quantitative easing. As long as all they have to do is say that, all they have to do is spread that rumor, and the markets will continue to push the US dollar down, which is again great to their benefit and to the detriment of the other countries out there. What's interesting here is that those countries that have a peg to the US dollar, i.e. China, don't really care. They've got a peg, so if the US dollar drops in value compared to other currencies, so does the Chinese yuan. That means that this is also China's benefit, and this is why at the same time as the US is pushing a low dollar policy, they're pushing China to float their Chinese currency higher. Of course, while that goes on, the US dollar in comparison to other floated currencies such as the euro, the South American currencies, African currencies, and other Asian currencies has depreciated in value quite a bit. So other countries that have a floated currency right now are screaming, and it's again a race to the bottom. Brazilian Prime Minister or President, I don't know which, just announced a couple of days ago that it is literally a currency war out there. So let's take a look and let's continue with our charts. I read some other articles here on Bloomberg about how it's a total race on for yield. So while the U.S. Treasuries and other treasuries, especially the in Japan as well, have little to no yield, the traders and the investors have to go looking for yield elsewhere. And that is why currencies that we're trading right now that have high yield are tied into global economic demand are doing so well right now. And it's basically, I'll show it to you in my model account as well. And I'm literally trading this idea, this strategy. So today's trade's on the USDHUF. I actually put this position on a couple of hours ago in the morning. It actually worked out well right at the get-go of the morning, right at the morning of Eastern Standard Time. However, as the hours have gone by, the slide has sort of come back up again. I'm not too worried. I'm still up about 587 pips on average. So that doesn't worry me too much. I may even sell a little more if the currency comes back to this point right here. I don't have a stop loss at this point right now, simply because even if the currency suddenly whips up back up here, which I feel that is unlikely, the probability is very low, I will still sell a little more because I'm capturing so much in the yield of this currency pair, in the yield differential. Again, we can see on the 3-hour time frame the CCI kind of diverging from price. We're seeing lower, or rather higher lows here, here, and here, and lower lows with the currency. So not a big surprise that it's going to turn around a little bit, because it has been oversold for quite some time. If I see CEI kind of balance out, come back here around somewhere like that, I will probably sell a little more and hold on for a greater length of time. So right now we're up on average 586 pips on the USDHUF, and we're going to continue to hold it. If we look at the daily, the trend, the short-term trend right now, the last 3 weeks, has been a solid downward movement. There needs to be some exhaustion on this downward move, so I'd expect it to come up a little bit at least. However, if you look at the longer time frame here, there's still got some ways to go down here. Still got another, I'd say, about 600 to 800 pips to go down before it even normalizes to what it was last year. So we got lots of time. Next up, we're moving to my other favorite currency, the Aussie dollar. Aussie dollar has been going beautifully. Again, perfect trend. Has been going gangbusters in the last 2 or 3 days especially as well. Not a big surprise. The Aussie dollar is tied into China, and China's growth means Australia's growth. Australia already has to keep its inflation rate sort of in check. They may increase their interest rates coming up next week or the week after. So if that happens, we're going to see this currency shoot through the moon. If not, it still will stay stable, as it will move in line with China's economy. Again, just to reiterate several more times, I am a China bull. That trade I made yesterday, initially when I reported it in yesterday's video, it wasn't going so hot for me in this trade. And now, as soon as today we've seen it, the Turkish lira, the USDTRY, has tanked some more. And we're up a total of 264 pips on average. And what I like about this currency is that it's a very, very high yield. However, it is getting near to the point that I said in earlier videos that I would actually close off some of my positions. So I probably will set a portion of a stop loss around here somewhere, probably around 1.456. And so if the market comes back up to about that point, I will close that a portion of this trade, not all of it, because simply put, I'm just making too much on the yield. So I'm gonna probably set it to about 1.45 or even maybe 1.458 around there. When it gets hit, I'll sell a portion. So that's it for my 3 currency pairs, my 3 yielding. Let's look at how I've been trading my model account. This was yesterday, how I was doing against the S&P 500 and the Toronto Stock Exchange, the TSX. The S&P 500 is down a little bit today, while the TSX roared. And actually, we haven't covered those. let's take a look at the TSX and the S&P. S&P 500 is again not doing much right now, while the TSX has just roared. And the reason why: TSX is highly integrated with gold stocks, and so when gold stocks do well, TSX does well as a whole as well. And something like 20 to 30% of the Toronto Stock Exchange is simply energy and mining companies, if not probably a higher average. So TSX has done extremely well in the last day. My securities that I own on a mutual fund have done extremely well, if anybody cares. Anyway, on the actual currency model account today, made a little bit. I have not closed any trades in the last in the last day. So the additional interest in realized gain is through the interest rate being paid on the yield. So I've made around 7%, 7.07% just in yield and holding on to these trades that I have. So literally, it's easy money. I'm holding on to it. I'm not doing anything. I'm just holding on to a trade that I've made earlier, a profitable one at that, and I'm making realized gains. My NAV, however, my net asset value that's realized plus unrealized P&L, is now up to 19.73% versus the 17.6% yesterday. I'm doing extremely well in my unrealized gains here, and so I have a lot of room there. I may even be able to get a little bit more aggressive in my trading. Over the weekend, when I show some more videos, I will show my risk management and my portfolio management analysis, and this is all pretty risk adverse kind of trading right now. It's just simply that I've been able to catch a massive trend that's a dollar bear trend, especially in the high yielding currencies. Anyway, that's it for today. I have to run off. This is Dr. Good Vibe from OmegaSupreme.com at 5:57 p.m. Eastern Standard Time in Toronto, September the 29th, 2010.